Has Janet Yellen called it perfectly? Is December the perfect time for another rate hike and the time for quantitative tightening now?
Well, the perfect time for a rate hike was about 3 years ago. So they've been dragging their feet on it, but I think they will move again in December.
So tell us how healthy then you think the U.S. economy is, because it sure seems like we're only now beginning to see more signs of inflation. It's been completely stagnant.
Well, I think the economy is very healthy. I don't worry at all about whether the inflation rate is 1.6% or 2%. Who cares about things like that? We don't want to see inflation running wild the way it did back in the early 1980s. But the economy is in good shape, but it's fragile. It's fragile because asset prices of all sorts have gotten way out of line with historic experience.
Well, Professor, let me ask you two questions then. The 10-year yield after this jobs report is 2.39%. What, if anything, has the economy suffered because the Fed didn't raise rates several years ago, as you say they should have? And then also, what can we expect next then if we're already too late?
Well, I think the real problem is that asset prices, equity prices, bond prices, commercial real estate prices have all gotten to be way out of line with historic experience. Even with rising earnings recently, the price-earnings ratio is about 60%. The S&P price-earnings ratio is about 60%, 60% higher than its historic average. Has it done any harm? Not yet. The real danger is that as that unwinds, it could bring down consumer spending. It could bring down economic activity in the economy as a whole.